The US stock market closed last trading week at fresh highs with the advance of all key indexes. The euro also surpassed 1.20 against the US dollar, the level last seen on March 4th. Analysts warn that the US equity market is obviously overheated. Looking at the daily chart at the S&P 500, we see that the price has surged to 230 pips or 5% from a 50-day moving average. In other words, the market could fall so deeply by the same 5%. The other scenario is that the market could sustain the bullish trend. Now let's find out what developments these scenarios could entail. Both the Dow Jones and the S&P 500 closed the last week with gains. They are extending growth of the first day of the new week. Meanwhile, technical charts warn that a sharp downward correction is looming over the market. Recently, technical experts point out that the time is ripe for a deep downward correction. This could happen due to both negative news and sell-offs of stocks by large investors. Nothing has changed so far, but market participants are braced for the correction anytime soon. In the meantime, investors are willing to make risky bets. Today, the Dow Jones reached the mark of 34,210 points. It's expected to trade in the corridor of 33,900 to 34,500 points. After a long-running fall, the US dollar index looks feeble with the prospects for a further decline. The bearish outlook will remain valid until the index rebounds. Now the euro is holding the upper hand in the euro-dollar pair. A further trajectory will depend whether the euro will be able to hold above 1.20 against the greenback. There are two headwinds for the US currency. First, the Japanese yen appreciated to 108.09 against the US dollar. Analysts consider this as a signal that Japanese investors are poised to fix profits in the US market. Second, gold locked a notable advance last week. Importantly, the metal reversed upwards for the first time after a protracted downtrend since early January. Today, the US dollar index is trading at near 91.09. It's projected to hold in the corridor of 90.70 to 91.30 in the coming 1 or 2 days. The Canadian dollar is extending strength against its American rival. The loonie is propped up by the weaker US dollar and rising oil prices. At the same time, the technical picture indicates that the Canadian dollar is unlikely to pick up more steam. The USD CAD pair is expected to come to a standstill and reverse upwards. Today, the currency pair is trading at about 1.2480. Interesting developments are unfolding in the crypto market. Bitcoin has lost almost $10,000 over the latest 24 hours. No one would have imagined such a weekend under the most pessimistic scenario. The culprit for such a collapse is a negative information background. Last week, cryptocurrency platform Coinbase debuted in Nasdaq in a direct listing. This event was accompanied by hype and a slump in the company's shares. Besides, a plunge in the crypto market could be caused by the rumors that the US Treasury Department could bring charges against a few financial institutions for alleged money laundering by means of cryptocurrencies. Some analysts link the Bitcoin slump to the fact that the hash rate of Bitcoin mining pools plummeted by almost 50% due to power outages in China. All in all, no one is able to pinpoint the exact reason behind the Bitcoin drop. In case the price rebounds back above the level of $56,500, it could continue its climb to $59,300 and further to $61,200. On the other hand, a breakout of support of $50,600, Bitcoin could tumble to $48,200. Global financial markets are braced for a trigger for a deep downward correction in the US stock market. Investors need a retracement to enter the market with new long positions. However, the US economy owes its resilience to progress in the battle with the coronavirus. And that's all for today. We keep monitoring the financial market situation. Subscribe to our channel and see you tomorrow.